Good afternoon. This is Ron Brown. It's Friday afternoon. It's the 7th of May. There's about 20 minutes left in the market day. I'm going to take a quick look at the markets after today's rally, and then I'm going to do something different. I've got a couple of support questions from people that are either coming back to HGSI or are new to HGSI, and I'm going to try to explain answers to their questions. One with a user SmartGroup, and the other one just talking a little bit about the Wyckoff methodology that I've incorporated into HGSI, and of course I've incorporated that into HGSI because Matt uh, gave me the ability to do it. I asked him to do it, and the information was already in there because of VPA or volume price analysis. But now we can look through the lens of both volume price analysis and Wyckoff analysis. So the first thing I want to do is look at the markets. This, for you newbies or people that are in the Insider Club, if you're not in my Insider Club, you should join. It's very inexpensive, and you'll certainly get your money's worth. It's $25 a month or $200 a year, so you get a big discount on the yearly price. But that's all the advertising I'm going to do right now. I'm going to take a look at these indexes, but before I do that, I'm going to rebuild them. So what I do is I go under Tools, Rebuild Indexes in Group, and it's taking the current stock prices, which are being updated every 5 minutes in Thinkorswim, and it's giving me a snapshot of the market as it is right now. So I'm going to let this play out. It takes a few minutes to do it when you use this folder. Most of the time we'll just look at the industry groups only, but I want to take a little broader look at the market now. On the Skype board, which is open to people who are Insider Club members, or actually anybody can join it if you want to learn about what we're doing. I mentioned yesterday that even though the tech stocks this week had really taken a beating up until late in the day yesterday, and today I thought the markets actually looked pretty good. So, okay, that's finished. So I'm going to click through to my warehouse views, and then I have to go up. These are indexes that are created by HGSI, so I go up to this folder right here, top-down scorecard views for HGSI analysis. If I just click on the basic scorecard, it is sorted by the percentage price change one day, and you can see the small caps. These are institutional stocks that are held by institutions, at least 50% institutionally held. That's at the top of the list. Mid cap is second, transports, Russell. So you can see that this is a small and mid cap day primarily. The Russell's been fairly weak, but there's bargain hunters evidently coming in there today. Now these numbers right here, the days since the 3 crossed the 6, and the days since the volume point of control, which is a VPA indicator, crossed over, are both 0. So this tells me that the small cap institutional index crossed over today with 20 minutes left to go in the market. Now the strength has been in the transports because it crossed over with both of these indicators 11 days ago. 0 is the crossover day, as I just pointed out. And then you count up from there, obviously. So the Russell 2000, I said it's been weak, and you can see that it crossed over on both of those 5 days ago or 6 days ago. Let me just bring this up, and I'm going to bring a chart up so I can illustrate this. Okay, I hit the wrong thing. I want the quick pick. These context analysis charts, charts number 10 And these are a couple of charts I put in this week. I may or may not leave them in. It actually has the volume point of control with the buckets. But I'm going to use this one, which is the one I use most of the time. And you can see the three crossing down through the 6, where this histogram in this window goes negative. And the same thing for the volume point of control. So the Russell's been weak, and it looks like, well, I know it's gaining some ground today because it's near the top of the list. What is it up? 1.2%. So let's compare this quickly to the transportation index, and you can see how strong this has been and where it crossed over on the VPOC and also on the 3 and 6 day crossover, where the 3 crosses up through the 6. These are powerful indicators along with pocket pivots. Okay, I'm going to move down to another view. I'm just going to go down to the 3 view. This is demand, supply. This tells me the advancers divided by the decliners. You can see out of these indices in here, 22 are up, 0 are down. So it's a strong market day right now, especially since what we saw this week with the tech stocks. And if you look down here, here's a 10-to-1 day on the sectors. That means all the sectors are up. Transports 9-to-1. The industries 8-to-1 in the industry. So there's 155 industries up and only 19 down. Another indication of a very strong market. Semis have been weak until today. There's 26 up and 4 down. Let's go down to the bottom. The small cap has made the biggest percentage price change, but if I look at the advancers versus decliners, well, it's nearly 2-to-1, which is good, but not anywhere near the top of the list. Still, it's positive, and there were some days this week where some of these indexes were 10-to-1 negative. So, this is looking good going into Friday's close. Now, the jobs numbers came out today, and it was weaker than expected. So consequently, that's an excuse to buy stocks because the Fed won't be talking about raising rates and so on. That's just part of the market psychology. But there was a strong close yesterday, late in the day, which also gave stocks a boost. Now from this scorecard, I'm going to take a look here now. Here's the NASDAQ 100, 5-to-1 positive, 85 up, 17 down. Yesterday, even when the techs were down, it was about 50-50. Now here's the S&P 500. What I want to do is I want to locate the industries index, and from here I can go top down, and I'll make this full screen. And I'm still sorted on advancing issues versus declining issues. And look at this. Once again, the home builders are killing at 23-to-1. Auto parts 36-to-2. Entertainment 17-to-1. Waste management 16-to-1. And so on. So you can see there's a lot of really strong groups here. Here's the industries index. I already pointed this out. 155 up and 19 down. Let's just take a quick look at the home builders. You can see how strong this chart has been for quite some time. If you look here at the 3 crossing the 6, there were some moments or a few days of weakness, and then it went right back up. This pretty much corresponds with the volume point of control. And a couple of days of shakeout day. Went negative, the 3 below the 6, and then it crossed over the VPOC, turned positive that day, and it was crossing over on that day too. So another opportunity to get in now. For the newbies, you can change to the industry group and go down from here, and I'll go to a different view. And here I'll just go to number 7, and this gives me the intraday information about what the housing stocks are doing. And this column right here, going into the close, 10 minutes left, it shows me that these stocks, the ones in the 90s especially, are closing near their high of the day, which is very strong. Let's look at KB. You can see right here that it's right at its high of the day going into the weekend. Now let me bring a little bit of Wyckoff in here. These are the columns. These are my Wyckoff columns, which Matt put into the program. And you can see that on KB, even though it's hitting its high, the VPA volume is less than average. The spread's below average. And the close right now, well, actually, this was yesterday. I'm sorry. Let's go on. I got a little off track here. These are good at the end of the day. Let's bring the chart up and I'll point this out. I made a mistake there. Got ahead of myself. Okay, so yesterday, what was the volume? Here's the average 90-day line right here. So it was less than average. The spread was below average. The spread of the candle, or the range, and the VPA close was in the middle, and you can see that it was in the middle. So this information here is yesterday's information, but if I click on today's candle, this information is reflected over here in the Wyckoff indicators. So the spread, the volume is still low, and you can see that. It's well below this moving average line. The spread is above average. This is a wide spread today, and the close is very high. So just remember, if you're prospecting at night or early in the morning before the market opens, this information is valid, but if you're looking for Wyckoff information during the day, just open up the chart and it's all right here for you. Okay, now where did I get this information? Well, these rules are Wyckoff rules, and this is a book called Wyckoff Strategies, Techniques, and I looked at this information and applied it to HGSI. So if you look at this here, demand is considered to be present if a stock rallies on increased price spread and increased volume, or reacts or pulls back on decreased price spread and increased volume. Supply is present if a stock reacts on increased price volume spread and increased volume, or rallies on decreased price spread and increased volume. I'm not going to read all the way through that, but this information is in this book, and if anybody wants this information, actually, what I'm going to do right here is I am going to make I don't need to make a snag it. You can just pause this and come back to this point and read this information. Anyway, that's where the Wyckoff information comes from, and you can see that really I didn't have any great demand stocks in here yesterday, because on the demand stocks, all of these are green. Okay, now what I want to do is I want to get back to my broad market indices. I'll click through to here, and then I'll go back up here. And right here. So this is the way these indexes stand today, and I already pointed out the advancers versus decliners. This is the beauty of HGSI now. When it was the end of day program, we were limited to end of day information, but by rebuilding like I just showed you, you can have intraday information and get a feel for the markets. Now I'm going to do one more thing. I'm going to take a look at the S&P 100. Or 1500, not 100, and I'm going to go in to these HGSI index charts, and I'm going to look at a few of these charts. This is showing the strength here of the S&P 1500. This is the advancing issues. This is a cumulative advanced decline line, and you can see how strong this is. You can see that the index is near a 52-week, if not an all-time high. You can see that it's riding above the 3 and the 6. Kind of hard to see. I may have to alter those colors, but the trend is clearly up. Okay, this is one chart. Now let's go down to chart number 5, and this shows me the percentage of stocks above their 20-day moving average, their 30-day, their 50, and their 200-day moving average. And if I put this over here and click on alternate I on the keyboard, bring this over, make sure that I'm on the last day, it shows the percentage of stocks above these moving averages. Almost 70% above the 20, 72.59 above the 30, 74.36 above the 50, and 91.38 above the 200-day moving average. So there's absolutely nothing weak about this index. And next, I'm going to show you one more chart, and then I'm done. This is a chart I put together probably 15 years ago now, and it when we have a very strong day on advancing issues versus declining issues, 5-to-1 day, you'll get a dark green bar here, and the same for the volume. And then the force index is green, and the force 2 will be green, and the volume point of control will be green, and then you'll get a green bar here, which is a buy signal. So what have my last two signals been? They've been buy signals on this index. So, there's been a lot of gnashing of teeth this last week about the market rolling over, but I just didn't see it. And I didn't see it because I went in here and I looked at these indexes. Now, what I want to do is I want to, first of all, I want to address these Wyckoff scans, and I'm going to go to all securities and go to a warehouse view, and I can look at these either in user smart groups, or I can come in here and look at these scans. Now I'm going to look at Wyckoff demand and supply scans with VPA flags. So we have a combination of Wyckoff scans with VPA flags. Now when I click on this, and if you look over here at the left, you can see that these are all in high demand stock. These are all high demand stocks as of last night's close. VPA volume high, spreads above average, and the close is very high. Now I'm going to take this combo. There's the bell. I'm going to, darn it, I hit the wrong thing. I'm going to take this combo ranking off so these don't resort. And just out of curiosity, when I go down to the next view, these are held. Let me go back up here. I want to point this out. Notice that the top stock here is Cushman and Wakefield. This is the end of day scan. It tells me there's a lot of demand for this stock. It crossed over, the 3 crossed over the 6 days ago, and the volume point of control did also. So I've removed the combo so these will not resort. And when I move down to the intraday, notice that most of these are green. These are closing prices here as of today. So these stocks that were in demand yesterday, most of them, because it's a strong market day, followed through today. And look at this range on these stocks. Let's just take a look at, this is unusual that all of these are closed near their high. Let's just take a look. And I want to go back to frequently used charts. Go down to my context charts. I'll go to number 10 again. And it's true. They closed on their high. So this is a good example of in-demand stocks. So here's the in-demand signals from yesterday, which I see over here in the Wyckoff. And see this dot in the center? Remember, I'm scanning for in-demand stocks that are Wyckoff stocks and also a VPA flag. And this had a effort to rise, which is a high demand VPA flag, and then there were pocket pivots. The volume point of control is positive, it has been, and the 3 is well above the 6, and we had follow through today on this. So what are they today? This is, as of today, above average. Okay, first of all, the volume's high, the spread is above average again, and the close is very high again. So this is a good example of using Wyckoff and VPA together. This is an extremely powerful program. You won't find this anywhere else. Don't even try. Same thing here. This was in demand yesterday. I'm clicking on this. Above average, and very high. What do we have here? Above average, very high. So this is a gap up, more than likely on earnings. Here is a VPA flag, an effort to rise. There were 2 of them. High volume up bar closing on the high indicates strength, and that was yesterday. You can see it went above the 90-day moving average, and then this followed through today. It too closed at its high of the day. Let's just look at the next 2 because they closed at the high of the day too. Okay, here's your effort to rise, and above average, very high. This was yesterday. What is it today? Click on this. Volume is low. Volume fell off. If you look down here at the mouse, you can see that. Spread's above average, and the close is very high. One more. Watts Water Technologies. Wow. This thing has really had a run, and here we go again. High, wide, very high. High, wide, very high. What is it today? Above average, very high. And here is our VPA flag. Let's go back here several days. What was it? So volume was less than average, but the spread was above average and the close was very high. So this indicates that there was demand on this day, and there is a low volume test. Volume was low, but it closed near its high on low volume. That indicates that traders are not selling their supply of stock. Now this is just one of the VPA scans. I've got several of them, and it explains what they are. If you go back and pause on that section where I was explaining them, here's wider spread on lower volume. This indicates lack of supply. Here is the lighter volume. The spread was above average, and the high was, and the close, was very high. And this stock has been moving up over several days based upon my 3 and 6 day crossover, and also the days since the VPOC. Let's do the same thing here and see how these held up today if they followed through. So I'm going to go to my intraday, and this one did pretty well too today. When you have a strong market day, you're going to see this though, but these with the signals last night held up very well. This one closed at 100%, and then I'm going to move on. So what was it yesterday? Volume was low. You can see it was low. And the spread was wide, and the close spread was wide, and the close was very high, and there was a VPA flag there again. So I'm scanning both for Wyckoff, and VPA. Now I've also got other scans in here. If you don't want to use the VPA scans, you can. If you just want the demand scans, same thing without a VPA requirement. Okay, let's move on. I didn't want this video to get too long. I'm already 25 minutes into it, but anyway, I want to point out now. Somebody, a customer who's coming back to HGSI, wanted me to help her and her husband with this. This is from Larry Connors. Rules for the Connors Research Quality Companies in an trend strategy. Rather than going through multiple filters and so on, stock liquidity, quality ROE filter, quality stocks with strong momentum. This is what I came up with, and it may or may not work for them. But one great new feature in the past 6 months in HGSI is user SmartGroup. So down here in Momentum, scans, and by the way, if you're an insider, when you install the add-on today, you're going to have this scan too if you're interested in it. And I just put it under Momentum Scans, and it is liquid high return on equity and high relative strength stocks. Now I couldn't do exactly what she wanted to do or what Connors had outlined, but this is close. It's probably even better. So let me bring this up here. I'm going to edit this, and what I did is I just I took the source group, which is all securities, and I created this filter. Very simple filter. Last close greater than or equal to 15. I didn't even put a minimum volume in here because we're using average dollar volume, and I had to do this on the 50-day moving average because we only have 2 average dollar volume figures, but this works. And what I put in here, 50 million, I believe, and a minimum return on equity of 10. So if I click on preview, and you can see the average dollar volume here, and if I sort on the down arrow, it's 50 million, and you can see the ROE here. The ROE numbers are minimum of 10. Okay, and then I created a very simple combo. Connors wanted 6 months. I don't have 6 months, so quarter, I'm using the quarter. The percentage price change quarter, weighting that at 100%, and he wants the top 10. I put the top 20 in here because I'm going to show you what I did with this, just to give it some flexibility. And his stated purpose is to buy the top 10 that have gone up the most in the past 6 months. So I'm going to click on that. I'm going to rebuild the user smart groups. And while I'm doing that, I want to point out that there is a new folder here, HES box stocks and perfect speculator. These are stocks that have moved up to a new high, a new 52-week high, or a new 3.25-year high. And they're very strong stocks. These are stocks that will have broken out, and they may have pulled back, but they're near their 52-week high. Let me just, while I'm talking about it before I forget, and there's $50 or less box stocks. These are all box stocks. And if you don't know what a box stocks is, you better join the Insider Club. But I'm limiting this to 16 to use the charts that in Thinkorswim that I showed you in last week's webinar. Okay, anyway, let's get back to this other one. Under momentum, and you're going to find it down here. Right here is the one I'm looking for. You can see that there's 20 securities in here. Now when I click through and go down just to a generic intraday view, you can see that all 20 of them come through, and everything was up today. Teradata must have reported today. Yeah, 5/6. What's this, the 7th? They reported yesterday, and evidently the earnings weren't liked. But here's a nice list of stocks just from running that without having to do anything else. And I'm just going to flip through these. I'm going to sort on raw combo. And, look at these stocks. I'm sorry, let me go back one. I want to show you something. Open up the fundamental panel. On this page, 20% ROE. This Crocs has 121% ROE. This stock has 16.84. Harley Davidson, nice move up. Look at these. Look, these are LLUR stocks, lower left, upper right stocks. Louisiana Pacific, I was in this stock until last week. I closed out. I had some debit spreads on it and made 50% on my money. Carter's, nice move up. Let me zoom out on this. Actually, what I want to do is I'm going to bring up a new charting window, and this is going to be a weekly chart. I didn't want to do that. Okay, so there it is. And you can see that it's chopped around, but we're just going on percentage price change over the past quarter. I think I put it in for the quarter, actually. So Discover Financial Services, been a beautiful stock. Telnet Healthcare and so on. So according to this filter, I mean, these have gone a long way, and I don't know if I necessarily agree with, buying all these for the long term. But what he's doing, he's looking for these LLUR stocks and hoping they continue up. Now, she wanted 6 months. I just did it for a quarter because that was my option. If that person wants to take these stocks and open up the ranking module and look at this, you can see the percent change over 26 weeks or 6 months. Here's Louisiana Pacific. These are the stocks that have performed best over that time period. So you could just take the top 10 stocks here and buy them in a basket. Now, when these stocks have run this far, they may or may not keep going. So anyway, it's an interesting concept, and in a real strong bull market, it probably has a lot of merit. But these have run a long way now, and there's probably going to be some consolidation before they go higher. But if you're going to hold them for a long period of time, more than likely it's going to be okay. Anyway, thanks for listening, and I was just trying to incorporate answers to questions for potential clients for HGSI, and also people that are coming back to it, or for anybody. I mean, this program is absolutely amazing, and there's not much that we can't do with it. So if you're not a subscriber, you should be. Thank you for listening.